Hello traders, now let's discuss the boomerang. The boomerang is more or less the traditional trademark pattern of the BOT. Now, the boomerang essentially is just a fake out of a third tap, right? But you need to identify what makes it valid, etc. So if we're looking at this current wedge pattern, for example, we're looking for the third tap fake out. It's as simple as that. We do not trade third taps of a traditional pattern because we don't trade it. Vice versa, if we're taking a trade here, 1, 2, let's say we're taking a third tap here. This is invalid. We do not trade this. This is a retail pattern. We don't. What we do with the BOT is we trade the third tap fake out. So instead of taking a short from this particular resistance of the ascending wedge pattern, we're actually looking for setups above. We're looking for the boomerang, the fake out of the third tap. Vice versa, if there's a descending channel, we're looking for a fake out and then a rally back inside of the pattern. It's as simple as that. Now, when we identify the correct area, we look to the left and normally there will be a banker block there or an imbalance, etc. So we're looking at this area and vice versa for this area here. If you see a banker block or an imbalance or whatever you see at a third tap and it just looks sweet and juicy, do not trade it. It's invalid. This is part of the rules. We are not trading the third taps. We're trading the boomerang because the third taps, there's normally a boomerang. This is why pattern traders don't really succeed in this game because they're taking every single third tap or the second tap, but it normally does a fake out. Okay. So we're trading the fake out. So we're not using this banker block here. We're using the one that's outside of it in confluence with the boomerang. Sometimes you might have a banker block here. There may be multiple ones and there may be one here. Let's say there's one here and another one there. If prices rally into the upside, we're not taking this one because it's inside of the pattern. So we delete this banker block or an imbalance or whatever level there is. We'll be taking this one here because it's outside, or even this one. This one will be a little bit too far away, as you can see. So we're mainly just focusing on the one that's relevant to the boomerang. Now, the last thing you want is to take a boomerang that's all the way up here. That's not going to work out. It needs to be in confluence with the nearest one or two just outside of it. Okay. And obviously you look at the previous concepts that we cover, you'll know that there's going to be plan A and plan B. Sometimes fine. You could see a plan C. That's fine. But plan D, E, F, they're not going to cut it. So we're looking at that, and vice versa. If there's multiple banker blocks to the left, we're looking for the boomerang of the 1, 2, and 3. Again, this could be a bit of an expanding, and price action could be doing something like this, for example. There could be an area here, and you may see a boomerang outside of it, and we're looking for the shorts. You just have to look for the banker block that's in confluence with the boomerang, whether it's above within the high. You just wait for the confirmation. Look at the banker block that's relevant outside of the pattern. That's essentially what we do with the boomerang. It's quite simple, to be fair. You know, the last thing I want to do is complicate stuff, but it's not that. It's not rocket science, everyone. Okay, let's look at some live examples. We've got multiple boomerangs. Over here on the left, there is a wedge. We've got, again, 1, 2, and you guessed it, there is a boomerang. And obviously, when you investigate further and you zoom in to that particular boomerang, you need to use all the concepts that I applied at the beginning of the video and look for the boomerang, look for the banker block in confluence with obviously the breaker structure. Maybe there's some equal highs. You need to investigate what is happening here. But you only do that once the pattern is ready, and the pattern will be ready on its way up. Then you need to look at all the banker blocks that's in confluence with it, and then you can look for the boomerang entry. Over here, what do we have? We've got, again, 1, 2, and you guessed it, there is a boomerang. It's very, very simple. Over here, 1, 2, and there's a boomerang. This low here would have been updated to this one, as you can see. Now we've got a larger one. We've got 1, 2, and you guessed it, there is a boomerang. We're specifying on this entry here. We look at the live markets or the current price action. If this decides to rally, you can now anticipate a live market. You can now anticipate a live trade. So let's just say it starts to rally. Okay, it starts to rally. We update it. So this will be our new relevant low. As you can see, let's actually zoom in a little bit more. New relevant low. If it starts to rally, that's our new relevant high. We've now got to update this pattern here. And what do we have? A potential boomerang. We've got 1, 2. If it rallies, you guessed it, we're looking for a boomerang, most likely above these highs here. And look at the liquidity, the bank level, or the imbalance over here. And there's no coincidence that normally the pattern is in confluence with a level. Happens time and time again. Look at this beautiful imbalance on the M15, and it's right in confluence with a potential boomerang entry. Quite simple stuff. So this is just giving you guys an example of how the boomerangs work. Now, if we were to forecast a new boomerang, I'll draw this pattern here. This would be our current high. Let's just say the market drops to the downside. I've got this as a plan, as a boomerang, but let's just say that never happens. Fine. It's not the end of the world. You know, we just update the pattern. We've got this scenario. So let's just say this just doesn't work out. We just delete it. Fine. If it starts to drop to the downside, right, that's fantastic, because we're looking for, you guessed it, a boomerang, a fake out of the third tap, right? The same scenario that happened here, for example, over here on the left, there's a fake out of the third tap of the trend line. So when taking a bullish boomerang, you want to look for a descending pattern and you look for the fake out of the third tap. If you're looking for a bearish boomerang, you're looking essentially at the fake out of the third tap on an ascending pattern, and then you look for the boomerang. It's a very, very powerful concept, everyone. Really, really powerful. And this is why you're here. It's to become profitable. It's to become funded. It's to become a 7-figure full-time trader. That is the goal, right? If you pay attention, put the work in, follow the rules, watch the live streams, etc. I'm going to do a separate video on the process of joining the BLT and how to take the most out of it efficiently. There's going to be a video on that. You don't just watch the video once and expect to be profitable. No, I'm going to show you a process in terms of really capitalizing on your learning growth and maximizing the potential chances of you becoming a profitable full-time trader. So this is just, typical BLT, typical boomerang. It's very, very textbook. And again, if there's a larger pattern, you guys know how to do this now, right? We may have maybe a large pattern here, for example. Yeah, there we go. Don't have to be perfect. In this example, we may have a boomerang of this larger parallel channel. So just an example, look for the fake outs of this third tap. And even if it climbs up here, we've got 1, 2, and we're looking for the boomerang and it closes back inside, right? Okay, fantastic. Good luck. Now go and back test, back test, back test.